The next step in figuring out your operating expenses is to figure out your ongoing expenses. To begin, we always look at the rent or a mortgage if you own the property, rent if you lease the property. These are typically the largest costs associated with operating your business. A rent or a mortgage cost can range from the several $100 a month range to the several $1,000 a month range, and usually takes up the greatest portion of the operating costs for the business or individual operating that business. The next stop for you in terms of figuring out your operating expenses is to figure out your ongoing utility expense. Utilities include things like gas, electric, oil, fuel, lighting, things like that, and will often be billed by your local municipality or your local power group or your local utility company on a monthly basis. And you're going to want to account for that and factor it into your capital ongoing expense spreadsheet. Again, you can keep this in a computer file or just on a piece of paper on a month-to-month basis. One of the considerations on ongoing expenses is going to be payroll and an owner's draw. You may be starting the company as its only employee, in which case you'll have a draw. This is akin to a payroll or a salary that you would pay yourself. If you plan to pay yourself salary at all, this is obviously an ongoing operating expense. If you'd like to make something akin to what you were making at your previous job, say $2,000 a month, you have to factor in that amount of money that you want to pull out of the business. Now, initially you may not be able to pay yourself any money, but you want to be able to account for it, because when the business does get up and running and start turning a profit, you want to be able to draw that money either in an owner's draw capacity or as an actual salary payroll item. Eventually, when you do get employees, you will of course have to pay them on a regular basis, and your business will have to be sufficient enough to be able to make payroll on a weekly or monthly basis. It helps, however, to think about that now and account for it again on your spreadsheet. When you're operating a business, it's always a good idea to have some sort of general liability or general umbrella insurance. This can be obtained through most of the major insurance companies out there, and we don't necessarily recommend any one over the other, but you'll have to check into your local area to determine which insurance companies are prevalent and which ones have the best rates. General business and liability insurance doesn't cost much more than a couple $100s a year, but would save you a lot of money in terms of any potential liability you might have for a brick and mortar retail location, or if you're offering a service to somebody or they're performing some sort of investing based on your recommendations, you may want to have that liability insurance to cover you in the case where something could go bad. In addition to licenses and permit fees that you may incur in terms of starting your business, you may have ongoing license and permit fees. Generally speaking, a license like a specialty license, for perhaps if you're a nutritionist or a dietitian, requires enrolling in a certain association. There may be a monthly or a yearly fee with membership in that association. In addition, generally speaking, you'll have license fees, whether you're a sole proprietor or a corporation, that will renew each year. Each year you'll have to turn in to the state or the local taxing authority an annual report showing them who is part of your business from a director standpoint, a board of director, a shareholder, things like that. And usually that's accompanied by a yearly fee. You'll have to add up all those yearly fees, divide it by the number of months in the year, and you could determine a monthly cost that you'll need to cover to be able to pay for those yearly renewal fees on licenses and permits. Another significant cost in terms of a monthly or ongoing capacity is your advertising and your marketing. Your advertising could be as simple as handing out a business card with word of mouth business, or it could be as complex as doing a multi-stage drip email marketing campaign, as well as having direct mail campaigns go out, having a team of people calling businesses in your area or consumers in your area to drum up sales, or just simply placing some advertising in your local yellow book. Whatever you choose in terms of your advertising and marketing, this is generally an expense, a large expense of your business. It's generally noted that every $1 of marketing produces $2 of sales. However, you do have to go out and fork over the expense of doing that marketing to bring in those sales. Whatever your advertising and marketing game plan is, try to have a clear and concise understanding of what the costs are associated with that advertising and marketing and what the potential return will be. As mentioned previously, you're going to have to pay taxes one way or another. These may be business and occupation taxes, they may be workers' compensation on your employees working at the company, they may be real estate or property taxes. Depending on whether you sell products or services, you may be required to pay some sort of excise tax or sales tax. Whatever type of business you are, whatever type of industry you are, you may have other taxes associated with that. You may also have other taxes associated with your local municipality. These are things you're going to check into when you're forming your business, and as you're doing so, you're going to make note of the types of taxes that may be prevalent in your type of industry, along with the associated fees, whether it's a monthly, yearly fee, or whether it's a bi-yearly or some other type of fee. You'll keep these in your spreadsheet as well, and come back to them often, as usually municipalities have the ability to levy judgments and liens on your business if these taxes aren't paid. They're very important to make sure they're paid on a timely basis, and you need to be able to account for that so you have money from your sales put aside to cover your taxes. Debt repayment will be an issue if you've borrowed money to start up your business, or if you're borrowing money in terms of your first couple months of operating expenses. You'll also have some sort of debt repayment if you've bought real estate, or if you're leasing real estate, you may not necessarily have debt repayment, but you may have some interest in terms of things that you pay on top of your rent or mortgage. You may also have some common area maintenance and things like that. These are generally things that are looked at in terms of debt repayment, especially if you have a mortgage or if you've borrowed money from somebody to start your business. If you financed your business with the use of credit card, that would be a revolving line of credit, which is also a debt. And the interest you pay on that debt will have to be factored into the operating capital that you need to operate your business on an ongoing basis. Finally, on our list of operating expenses, you should arrange or account for some additional working capital. This is kind of a buffer between what you've determined is going to be your ongoing monthly or yearly operating expense. We like to tell our clients to add in a little bit extra working capital for those unforeseeable things that could come up. Maybe there's a burst in the pipe and you need to hire a plumber, or maybe there's a theft in your store and you need to replace some inventory. Maybe there's an additional marketing you want to do. Maybe there's a trade show association and you'd like to have a booth at that association. Whatever it may be, we always recommend people set aside a little extra money for working capital. When all is said and done and you have your operating expenses in a list, you'd like to break them down in terms of a monthly or a yearly charge, an overall number. We like to break it down on a monthly basis because it's easier to break it down into the small little steps. Figuring out a monthly budget is something that people are usually used to for their personal lives, and it's easy to equate that same kind of thing over into the business line as well. What we like to think about is taking the number that you figured out with your overall expenses, your operating expenses for all of these categories that we've mentioned, and give that a bottom line number and resolve it to one single number on a monthly basis. When you've done that, you're going to multiply it by the number of months you think it's going to take to break even and start making a profit in your business, so that the sales you bring in after the expense of the cost of making those sales is able to go and pay your expenses. We recommend you do at least 6 months, but again, in your preparation of this business and your planning, if you've determined it takes longer, say a year or 2 years to do break even, then we would recommend you estimate your operating expenses out for those 12 months or 24 months, again, depending on what you've figured out in your research. When all is said and done, you will have your total operating expense. You've gone through these numbers, you've figured out what it is on a monthly basis, you've figured out how long you need to turn a profit, and you've multiplied those numbers to figure out exactly what your operating expense is going to be until you're able to turn a profit. Together with your startup capital you need, you can combine those numbers to figure out exactly how much you need to start the company and operate it until you're able to turn a profit. If you've added back in a little bit of extra working capital to fill in the gaps or any kind of things that could come up, maybe a surprise or something to that effect, you should be able to start and operate your business successfully without having to worry about any unforeseen costs. To give you a better example of determining your startup capital and your operating capital expenses, let's take a look at a simple example.